All right, guys. So here we are in the last portion of chapter 7. And what we have been through so far, or what I've tried to allude to in the last couple of videos, is we were looking at a budget, right? And we know that the summarized version is the master budget, but then you have all of these smaller budgets that make up the master budget. And we've looked at the operational side of it, or the budgeted income statement, and we've seen all of these smaller budgets and how they play a part in creating maybe a budgeted income statement. So again, we've done the sales budget, the production budget, and then direct materials, direct labor, factory overhead. We haven't talked much about the selling and administration expense budget, but we will talk about that in a second. And then we've created the cost of goods sold. And with all of those things combined, we can now create a budgeted income statement. So before we do that or look more into that, we're talking about selling and administration expenses. And this is usually the sales budget utilized to construct the SG&A expense budget. So we use the sales budget to create this budget. And why we do that is because usually when you're selling a product, you have delivery expenses that you need to consider. You have the marketing team and packaging. All of that is part of the selling and administration expense. And so it's really based on how many units that's expected to be sold. Okay, so the selling and administration expense budget is supported by the accounting, marketing, and selling department. Okay. So then our budgeted income statement. So our budgeted income statement is prepared using the sales budget, which we created, the cost of goods sold budget, and then the selling and administration expense budget that we mentioned prior to the slide. We also estimate other income like miscellaneous income or one-off situations, expenses, and any tax liabilities that we probably incur. And so all of this is summarized in the budgeted operating activities. And then usually when all of this is completed and everybody's had their say-so and they feeling great and there's buy-in, you usually have your top managers review the effects of the estimated sales, the costs and expenses on profits. And usually this is a point where the higher ups or the CEOs or the managers kind of look at the numbers and they're like, can we reduce our expenses? Can we increase our sales? Can I challenge them a little more? And so this is where you kind of get people kind of meeting in the middle to push the organization forward. So kind of things we've talked about already. All right, so this is just a summary of what we've seen before. We've already walked through the operating budget, and now I want to take a look at what the financial budgets look like, or the budgeted balance sheet. All right, so the financial budget reflects financing and investing activities. So you have two financial budgets, which we won't go into detail on, but you have the cash budget, which is very important, especially to entrepreneurs in any organization, really. But it estimates the expected inflows and outflows of cash. So some examples of some inflows is maybe accounts receivable or interest that's being paid to you, right? And some potential outflows are things such as, you paying for supplies or paying employees or paying for a bond or things of that nature. So you want to make sure you have sufficient cash on hand to cover all of those expenses. And then your capital expenditure budget, it looks at acquiring fixed assets. So many times companies need to make acquisitions for their machinery. Just because it's time to get a new machine, it's breaking down, it needs constant care. And so when you create a capital expenditure budget, you're like, hey, let me just work in the fact that, hey, this machinery is probably on its last days. And so let's work this into the budget and expect to pay for a new machine in the next couple of years. So this capital expenditure budget is prepared for 5 to 10 years in the future. Okay. And with that, we are all done. So hopefully you guys enjoyed this lesson as much as I enjoyed teaching it. I wish I could teach it in class, which I really enjoy, but hopefully you could have seen my passion and my commitment to you guys through these slides and through this presentation. Again, as always, if you have any questions or comments, please let me know. Thanks, guys.